Hi, everyone. Welcome to another episode of the LATAM Stocks Podcast. I'm your host, Patrick Flood. Today I'm speaking with Rafael Nunes. Rafael's the managing partner of Harbour Capital, a Brazilian firm that's focused on structured credit and alternative investments. These are really important and interesting markets in Brazil, so I'm excited to get to speak to Rafael today because there's not much coverage about alternatives and structured credit in Brazil, so I think I'm going to get to learn a lot today, so I'm excited. Hi, Rafael. How are you?
Hi, Patrick. I'm fine. And you? Thanks for the invitation.
No, I'm good, and thank you for coming on to talk to me. I'm very interested in the structured credit and alternatives markets in Brazil. I think they've grown a lot, and you're a great person to talk to. But before we get into the market specific stuff, why don't you tell me a little bit more about yourself? Where are you from? What did you study? And then what led you to founding Harbor?
Okay. So I'm from Porto Alegre. Porto Alegre is a city in south of Brazil, the southwest state of Brazil, Rio Grande do Sul. And Harbor is located here as well. I study business administration. Then I have a specialization in finance investments. And for a while, I worked as a broker, XP Investimentos. Then I left for working at UI. There I worked in tax advisory and business valuation and business modeling. And this was until 2015. Then I left to found a consulting company with my partner nowadays, Henrique. We left EY together to found this consulting firm. Then in this consulting, we used to work with small and middle market companies, helped them to fundraise and to structure debt. And then we saw the opportunity to start our own investment fund in this particular segment.
Interesting. So before we talk a little bit more about Harbor, I want to ask you about Rio Grande do Sul, right? Because I had a guest on a few weeks ago and we were talking about the flooding and, the economic impacts on the data. I know Porto Alegre Airport is still closed, months later. So
Yeah.
can you just tell me, you're there, right? You're in Porto Alegre. So what is going on with the flooding? Because the news cycle's kind of moved on, but the situation definitely is not over.
Yeah, the situation is better now, but mostly in the countryside of Rio Grande do Sul, the cities were really affected. Porto Alegre was affected as well, but in small locations of the city, and these locations are getting better, getting back to what they used to be. The airport is still closed because the road of the airport, the landing lane, but it will open in the end of October. So it will be 5 months closed. It's a lot.
Wow.
And for us, for me particularly, that I used to go to Sao Paulo once a month. It was a complication, but it's okay with the technology nowadays. We can turn that around. But the flooding itself, it was a really hard moment. I helped in the rescues and stuff like that, and it was really hard to explain to someone that didn't saw it, because it was really hard for us here, and the government took a while to begin to help and put all the people to work in the rescues and stuff like that. So in the beginning, it was only the common folks helping in the rescue. So it was, I think that 1 week that we helped the people to get out of their homes and be relocated to shelters and stuff like that.
So are people rebuilding still? Like, is it a ton of damage was done to buildings and infrastructure, and people are still in the process of, building new roofs or whatever got destroyed?
Yeah, I think that here in Porto Alegre, the locations that were most affected are the poorest of the city. So it's hard for them to rebuild, and they need help from the government to do that. But they are getting some help. So they are doing some renovation, changing roofs and stuff like that. Other cities, more on the countryside, were more generally affected. So not just the poorest locations. So people, that like people like a person of middle class, they have the money to their lives and stuff like that. But if they lose everything, they don't have
Mhm.
a reservation of capital to rebuild their house and stuff like that. So I think that the most difficult is for this kind of people, the ones that are in the middle class, because they don't receive the help from the government, because only the poorest receives, and they don't have the money to rebuild. So they probably will get poorer than they were before of the flood.
Is there, I mean, are most people insured? I mean, were most people or businesses that had damage to property or business, do they have insurance or no? It's just everyone's uninsured. If you lost your house, you lost your house.
It's not really common to have house insurance here. So some people have, but mostly the insurance covers like theft and robbery and stuff like that, and or fire, arson, but they don't cover flooding because it wasn't a thing. Because some areas didn't have the possibility to be flooded. It was the first time in the history, so
Okay.
it
So,
was
so people really did
yeah.
they really did lose everything.
Yeah, like the cars have insurance, nah,
Mhm.
but just
The
that.
houses. Interesting.
Yeah,
Well, thanks for that. Because, like I said, the news cycle has moved on, but I'm definitely still interested. And you're on the ground, so I can't think of anyone better to ask. But okay,
yeah.
let's get into the market stuff then. The alternatives and structured debt. So tell me more about
Okay.
Harbor. So, what are the markets Harbor invests in? Who are your clients? Retail, institutional? Any specific strategies? Whatever you want to talk about.
Yeah, we are focused on private debt as a general class, but more specifically on structured credit. So we have some clients that are institutional investors from outside of Brazil. Like we have four funds that invest here that are from Europe, but we have some retail investors as well as some ultra high net worth investors. And there is some kind of funds that we manage here and structure that are for companies. So family companies that they build their own funds. So the only shareholders of the fund will be the shareholders of the company, and it's like a vehicle to them to finance their ecosystem. And we have like factory funds, machine equipment and machine finance. We have like I don't know how to say, but there is a segment here in Brazil that it's very popular. The public employees, they have a possibility to take a credit in. Then the people that provide this debt, they can charge directly in the payrolls. We call it here consignado público. So you don't have the risk of the like people won't pay. You don't have the risk of that. You just have the risk of the government. It can be like the union or the state or the city hall. And this is a very popular segment right now. So people are investing a lot in this kind of funds. And we have like some investments in this fund, but more specifically in the Consignado Público of Rio Grande do Sul, here in the state. So we don't have anything of the union, not now, because the rates of return of this kind of investment are lower than we used to pursue. We focus here a lot in high yield investments. So we believe that if you are willing to take the risk of private debt, specifically private debt in Brazil, you have to receive a higher return. You don't the spread has to be higher than 1-2 pips per year. So you have to take a lot of return. So we chase this kind of fund. So our specific thesis of like companies that finance their ecosystem, this finance of equipment and machines for small and middle companies, consignado público. So this kind of strategies nowadays.
Okay. So when we talked previously before we recorded, you mentioned structuring as an important topic for alternative funds in Brazil, and you said maybe the market doesn't understand how they're structured or how they should be structured. So can you just talk a little bit more about how Harbor typically invests these alternative funds? Are they onshore Brazilian funds? Are they, the Cayman Sandwich with the Delaware LLC? And, how should an alternative fund be structured?
Yeah, so here in Brazil, we have like a specific kind of fund for private debt that's called FIDIC. It's Fundo de Investimento em Direitos Creditórios. So it's like a specific fund for credit. So you can do whatever kind of credit inside this fund. And they have a subordination layer in their structure. So you can take out some of the risk. So you have like the junior layer where the originator goes and the investors that are willing to take more risk. Then you have like the mezzanine layer and the senior layer. And this kind of structure protects the investor for the senior layer and the one for the mezzanine. And you have like returns that can be really high in the subordinated, like 3-4% per year, but per month, sorry. And this investor, this kind of quota is not available for all investors. Like the ones that originate the credits, they are willing to put money there, and usually they are not willing to open this quota to other investors. And we think that the secret in this kind of strategy here in Brazil, it's how you structure the fund. So who are the players that are going to be in each of the classes and stuff like that. And nowadays we don't have any fund outside of Brazil, none of them. But we are building a Luxembourg structure, so we can fundraise in Europe or Asia and Middle East and bring this money to invest here in Brazil in this kind of structure in FIDICs.
Interesting. So I want to ask you about some of the more specific, the strategies you mentioned, the machine financing and the consignado. But first, maybe we should talk a little bit about the market in general. So just level set, so listeners that don't know anything about structured debt in Brazil have an idea of, what the market is, what's going on. So can you just tell listeners a little bit more about, the structured debt, the private debt market in Brazil? Is it a good time to be allocating? Is it a difficult time for you to be allocating?
I think it's a good time, but you have to be careful in which way you go. Because here in Brazil, I think that's common in other places as well. We have like people always go to the same kind of investment at the same time. So like consignado público, it's the top of the discussions here. So all the money from the banks and the big investors is going to this kind of strategy. And because of that, the spread of the classes is going down. So it's for us, we lose the interest in investing in this kind of strategy because we believe that the risk return it's kind of damaged. For us being here in Porto Alegre, it's advantage to be outside of this kind of behavior. So we are not doing the same thing that everyone is doing because the financial market here is concentrated in São Paulo. So we are kind of outsiders here. But Brazil is in a place nowadays of more stable, more stable economy. But I believe that we could be better. of course, because I think that we always can. But the market here, the private debt market specifically is growing a lot. In the last 10 years, the market has grown around 100. So nowadays it represents 1 trillion reais. It's like 10% of the GDP, the annual GDP. So I believe that it's more relevant nowadays, but it's small compared to other countries. So we still rely a lot on banks and government finance here.
So at 10% of GDP, it's pretty big already, but do you still think it's a growth market? I mean, do you think that that's 15% of GDP in 5 to 10 years? How big can it grow?
Yeah, I think so, because in the past, 10 years ago, we used to have a more representative share of the credit, the private debt, the debt market as a whole. It was the government used to finance a lot more. So this kind of government finance is getting smaller every year. And I think that even with the actual government, it won't get bigger. So I think that it's a growth market for the next 10, 15 years.
Okay. And how does central bank policy impact your markets then? Have lower rates been better for you? Do they make it more difficult? I mean, what are your thoughts on central bank policy and how it affects your markets?
For us, it's generally good because we can collect more performance. So we have investments that are pre-rated, like a steady rate. So when the
is CD. So the central bank rate's your benchmark for your fund, right?
Yeah, and then
essentially
when it gets lower,
your benchmark goes lower, and the delta is extra performance fee, right? So you locked in when Selic was, I don't know, 12%, you were content locking in the private deals at, I don't know, let's call it 20, but your benchmark was 12%. So you had an 8% performance. But if rates go down to 10 and you're still locked in at 20, your performance is higher.
Yeah, that's it. So we have some investments that we made in 2022 in Consignado Público that were pre-rated. So it was like 1.6 per month. Then the Selic was in 15 no, but like 14% per year. And then nowadays it's 10. So this extra performance it's good for us. But besides that, for the economy in general, it's better when the rate goes lower because companies are more healthier and they can get debt in a more cheaper way.
Okay. So help me understand then why the private debt market has grown so much recently. I understand what you said about the government lending less and banks being less willing to lend, but do high interest rates have anything to do with that? I mean, when Selic's at 10% and you have the highest real rates in the world, are most investors just content to take the CDI rate, and why bother go out the risk curve? Or
I think that there is a combination of factors, like the government is cutting the finance to companies. Investors are more sophisticated nowadays, so they are looking for different kind of investments. And our stock exchange here is not really going up in a way that S&P is. So they look for different kind of investments. And there is also a more sophisticated legal environment nowadays. So we had like changes in the regulation and the legal stuff that made the private debt more safer, more steady in the last 10 years.
Interesting. Yeah, that makes sense too. Okay. So I'm curious about one specific instrument that's grown a lot that I've come in contact with, of course, in my career, and it's the factored receivables market. And I started to see a few years ago, this market really started to take off. So why have factored receivables become so popular in Brazil?
I think that companies, we have like a behavior here that we are used to buy installments and sell installments.
Okay.
So without interest, it's a common behavior here. So companies sell like to receive in 60 days, but they have to pay their supplier in 30 days. So they need to get this receivable. So they need to receive in earlier than what they sold. So they have a lot of cash flow necessity because of that. So, and the banks are cutting this kind of finance. So the FIDICs are getting a cut of this market in the last years.
Okay. So that's interesting. So you think it has more to do with working capital management rather than the companies actually need financing and the cash flow stream they have is receivables. It's more about working capital.
It's working capital, and also these kind of funds have received a lot of money from investors in the past years. So they are lowering their rates, and then companies are getting more this kind of debt.
Interesting. So as rates come down, the factored receivables become cheaper for the company, so it's even more attractive.
Yeah,
And
it's more attractive than like you put a collateral and take a debt with a bank. It's easier to do this kind of finance.
It's less risky, right, in terms of default, because you're taking out all the operational risk, right? The product's been sold. It's just a capital inflow.
Generally, yes. Like you have a little bit of frauds in this market, because sometimes the company get this receivable and they anticipate with two different funds the same receivable. And now we are getting some regulations that are cutting this kind of risk, because you have to register the receivable, so you won't be able to anticipate in different places.
Okay, yeah, that makes sense. Logical. So what kind of returns then or rates would a good, attractive, middle-sized company in Brazil pay? If Seliki's 10.25 right now, how much are they paying above 10.25 for factored receivables?
A good company in the middle market, 1.4 per month, around that.
So like 3 or 4% above the central bank rate.
Yeah.
So like 14 or 15% annually, something like that. Okay, that's not that bad relative to.
No, it's not. Yeah,
it's reasonable.
Just because of this kind of behavior. Like the big funds have a lot of money nowadays, so they are getting the rates lower, and then the companies are getting more.
I'm thinking out loud here, but what would the same company then, the same middle market company that's paying 1.4 a month to factor its receivables, what would they pay if they were to actually structure a traditional debt note, right? If they were gonna, they would pay, it would be a higher rate, I'm assuming, right? But by how much?
Probably the same rate nowadays.
Okay, so then why would so that makes sense, right? That's why everyone's going towards.
Doesn't make sense, true. Yeah.
Why take the operational risk if you don't have to? If it's basically the same rate.
Yeah. So it's better to do the easy path.
Okay, so let's talk a little more about a couple of the strategies that you guys run at Harbor. So you mentioned in the beginning the machine and manufacturing financing, right? Is it manufacturing?
Yeah.
Can you tell me more about that? I thought that was interesting. I'm curious.
Yeah. So the banks are not interested in finance small and middle companies when they buy a machine to improve their workflow. So there are only two banks that are doing this kind of credit now in a relevant way. So there is a lot of space to finance this kind of purchase, like not in the agribusiness. In the agribusiness, they have a lot of people finance the machines, but like in the other sectors, like the traditional industry and stuff like that, there is a lot of space to finance the purchase of new machines or the renovation of the factories and the factors. And so this fund, they originate from the the sellers of the machines. So the sellers need someone to help them to sell more. So they send the application of that company, and in this fund, they do the credit analysis of the company, and they finance the machine. So they have the machine as a guarantee, as a collateral of the operation, as well as sometimes extra collateral like a building or stuff like that. So it's really a really nice strategy. It's difficult to get bigger because you have to like search a lot to different kind of distributors of machines and stuff like that. But it's a nice strategy.
It's interesting. So what's a typical machine cost? What's a typical ticket size? How long do they usually take to pay back?
Yeah, it's around 150 reais. So
1,000.
it's like, yeah, 1,000. It's like $30,000
Okay.
ticket. And they used to pay in 36 installments,
Okay.
around 36. And the rates are around 2.5% per month.
So it's expensive financing relative. So it's not.
Yeah.
So why have the banks then, right? Because you mentioned the banks don't have any interest. So if this medium-sized business gets rejected by the two banks that do this, they essentially have no financing, right? Unless they want to put it on a credit card, which is more expensive than 2.5% a month. But why have the banks, isn't that what the banks are supposed to do? I mean, isn't that
that's something weird that has happened here in the last years. The banks are getting more. They are having more fear to do credit, so they are taking off a little bit of these small companies and financing only the big companies.
And then are you regional? Like, is that fund mostly, because there's plenty of manufacturing in the south of Brazil. So is that mostly a regional fund? Are you working with local companies, or do you also finance companies in the Northeast, for example?
We do. We finance all around the country, all states. So logically, it's more concentrated here, but we have presence in all states.
Okay. And then are most of the products imported then, or like most of these big manufacturing, products that they're financing, is that mostly like imported products or?
Not really. Some are, the parts are imported and the machines are put together here in Brazil, but some of them are built here as a whole.
Okay, that's interesting. So is there another strategy that you guys have that you see the same thing where the banks aren't lending and there's this space in the market for you to come in and fill? Like you mentioned consignado, everybody's doing it right now, right? It's what's in fashion.
Yeah.
But is there another strategy you guys have at Harbor that's maybe been ignored by the banks?
Yeah, like we have a fund here that finance the tobacco industry. So yeah, because of ESG and some politics, all of the banks are, I guess, they got off this market. Some banks still finance these companies, but the biggest of Brazil are not financed anymore. So there is a space to finance the companies that process the tobacco.
Brazil doesn't produce much tobacco, right? They process it.
No,
Brazil
produces a lot. Yeah, it is the second biggest producer.
I shouldn't be surprised.
Behind China.
Right? Brazil grows everything, right? I shouldn't be surprised.
Yeah,
but I didn't know that.
And it's more concentrated here in the south of Brazil. Rio Grande do Sul is the biggest producer, then Paraná and Santa Catarina. These are the three biggest producers here in Brazil.
It's so funny. Like you mentioned the ESG, everyone tries to ignore the industry, right? And I do my best to track agro in Brazil. So like I could ramble off. Brazil does 25% of the beef exports. And I had no idea they were the second largest tobacco producer in the world because no one covers it. Yeah. Right. And I imagine less people finance it. So what kind of financing then do the tobacco companies need? Is that machinery financing too, or do they just need typical working capital?
They need working capital because you have two large companies in this segment. There are Universal Leaf and Allianz Tobacco. So they are the biggest purchaser of tobacco. So the middle companies in the small companies, they need credit to compete with these two large companies to buy tobacco in a nice price. So we are financing this purchase every year of tobacco. And then we get the tobacco as a collateral. So there is a company here that controls this kind of collateral. So it's a separated environment. Only this company that's it's not related to the tobacco processors. It's an independent company. They only have access to the tobacco. So it's a really nice place to be. And the rates are not really high, like 1.8, 1.9 per month, but it's a good investment.
I laugh because most developed market investors will hear 2% a month and it'll send off like it's like I don't know if I should even believe that, but in Brazil when the benchmark rate's 10.25, you can find higher returns. That's interesting. So do you do anything to hedge the tobacco price then, since that's your collateral? No, you're confident you're going to get repaid, so you'll take.
Yeah, no, because the tobacco is not a commodity. So there is different kinds of tobaccos and different kind of processing that they do with the tobacco. So we couldn't hedge that. So because sometimes it will be used through cigarettes, sometimes through other kind of stuff. So it's different. So it's impossible to hedge.
Okay. So then looking out, let's say, 1 to 2 years, what private credit markets do you think are going to grow? I mean, where are you seeing the most opportunities? Is the machine financing going to be a growth industry for you in 2 years? Or do you think, something else will come up? Are you launching a new fund and any new strategies?
Yeah, I think that there is always a trend industry. And so like the consignado now, so it's always something that is on the media and trending. I think that some strategies will remain growing. So like this machine finance, the tobacco, we have different strategies that we are still structuring here. So to fintechs, there is some space to do that. But I think that the market as a whole has a lot of opportunities. So the companies here in Brazil don't have a lot of access to that. So we have a lot of work to do here and a lot of opportunities to chase.
Do the companies you deal with have a preference for debt financing? I mean, do any of them come to you and say, I want to sell equity, or is it a fixed income market like the investment market in Brazil? Most investors prefer fixed income. So are companies the same thing? They'd rather take out debt than finance with equity?
No, actually the more traditional entrepreneurs here, they prefer not to take debt. It's the last kind of resource they will chase. They prefer to use their own capital, always their own capital, and don't sell equity as well. There is a industry that it's more used to sell equity. There is the real estate industry here. So like the smallest construction companies, they used to sell one part of the building that they're building to finance the operation. They don't think that this is more expensive than take debt. So I think that there is an opportunity to explore there as well to finance this kind of companies.
Interesting. Cool. So is there anything we didn't talk about related to Harbor private debt markets in Brazil that an international audience might be interested in before we wrap up?
I don't think so. I think that we covered the basics of the strategy and the firm. This fund that we are opening in Luxembourg will be ready by the end of the year, so it will be accessible to international investors. And I think that one thing that people have a lot of fear of Brazil with the lack of safety in this kind of investments. But Brazil is one of the more regulated countries in the world. The financial system of Brazil is really regulated. So it's really safe to invest in a regulated structure here. So I don't think that's a problem for international investors.
Yeah, I agree, especially when you're dealing with a firm like yours that focuses so much on structuring the fund properly that you can really mitigate that kind of risk. And yeah, I agree. So this was really interesting.
Yeah.
I appreciate you taking the time. Where can listeners find you, follow your work, learn more about Harbor, stay up to date when the international fund is ready? Where should I send them?
Yeah, we have like Instagram and LinkedIn pages.
Okay.
It's Harbour Capital with British spelling with a U on the end. And we just released our new website, so it has an English version as well. So people can find us at harborcapital.com.br.
Great. And I will link all that in the show notes for anyone listening so they can just click and find it. Thanks so much for doing this, Rafael. It was really interesting. I appreciate it.
Thank you, Patrick.